All right, welcome back everyone to the Deep Dive powered by MTC Radio. So, our mission today is pretty swift and clear. We're going to dive right into the market intelligence from January 6th, 2026, and, really try to pinpoint the actual forces behind this current market surge.
Yeah, it's been pretty powerful.
I mean, the headlines are everywhere. The S&P 500, the Dow, they're hitting fresh all-time highs.
So, okay, let's unpack this, because I think the real insight here isn't that they are up.
It's how they're up.
Exactly, the how.
You're absolutely right. For anyone who's focused on, sustainability in this market, the big numbers, the Dow climbing 1%, S&P adding 0.6, that's almost secondary.
Secondary to the breadth, you mean?
Precisely. We saw a really definitive shift in leadership today. Small and mid-cap stocks just dramatically outperformed. I mean, the Russell 2000 was up 1.4%.
And the mid-cap 400 was, what, 1.5%?
Gained 1.5%. So if we connect this to the bigger picture, it just tells you this isn't a handful of mega caps doing all the work.
Right. The market's health is actually broadening out.
It's demonstrably broadening.
Yeah.
So that broadening is crucial. But where's that initial capital really flowing? I'm guessing we need to talk about the AI engine again.
It always comes back to AI. It is the undisputed primary catalyst. The whole semiconductor space remains just, on fire. Just look at the PHLX Semiconductor Index, the main benchmark for chip stocks. It surged 2.8% today, extending its year-to-date gains to, roughly 8% already?
Wow. In just a few trading days.
And this wasn't just some, vague enthusiasm. We saw tremendous strength in the memory and storage names, and it was spurred by hard data.
The microchip news, right? I saw that.
That was it. They gave a significant guidance upgrade, and they basically signaled the end of that dreaded cyclical downturn.
So that whole inventory glut that was plaguing the sector, it's finally subsided.
It's in the rearview mirror. The supply chain is finally catching up to this massive, relentless demand from AI infrastructure.
And that news sent SanDisk, Western Digital, Seagate.
All of them. Micron, too. All posting double-digit advances. It was huge.
And then there's NVIDIA, the AI king. They had two major announcements today.
A real double whammy. First, they unveiled their new Rubin AI platform, which features 6 new chips.
6 of them, okay.
And then they expanded into autonomous driving through an open-source platform called Alpamayo.
Interesting. So integrating things like LiDAR and cockpit systems.
Exactly. But what's kind of fascinating here is that despite all that blockbuster news, NVIDIA itself, it barely moved. It just traded near its 50-day moving average.
Right, which is a key technical level. And that sort of kept a lid on the broader tech sector, didn't it?
It did. The whole sector was only up about 0.7%. But that autonomous driving angle had immediate ripple effects everywhere else.
Oh, yeah. You saw Tesla move sharply lower on that news.
Right, the perceived competition. And then on the flip side, the rideshare names, especially Uber, they rallied hard
on the potential for, faster acceleration of driverless fleets.
And that, in turn, boosted the entire industrial sector.
So the leadership is flowing past pure tech and into these cyclicals. We saw that in materials, too, jumping 2.0%.
Supported by rising metals prices. And healthcare also gained 2.0%, finally breaking out of that multi-week range it was stuck in.
And that was specifically fueled by Moderna, right?
It was. Their rally after submitting the seasonal flu vaccine for approval, it just confirms this rotation is active and real.
And all this momentum was happening, even though only 2 sectors finished lower and treasuries edged down a bit.
Exactly. The 10-year yield is near 4.18%. But, services activity cooling a little wasn't nearly enough to derail this powerful momentum. The market is just focused squarely on growth.
So what does this all mean? Let's bring it all together. Our takeaway seems pretty clear. The market is aggressive, it's growth-oriented.
For sure.
AI is the unmistakable catalyst, but crucially, leadership is broadening out into cyclicals and smaller caps.
Which suggests a deep underlying strength. And, this raises an important question for you, the listener. As you're watching these major indices hit new record highs and you're feeling that exuberance, how do you reconcile that with the subtle, continuous upward tick we're seeing in long-term bond yields?
That's a great question.
That friction point right there, I think that's where the market is going to determine its next major direction.
And if you're trying to move from simply analyzing these trends, understanding leadership rotation and these evolving AI themes, to actually trading and investing with confidence, you need support.
You need a community.
You do. And that is exactly what the Meta Trading Club community provides. To implement this knowledge, You need the daily market breakdowns, the insights, and the Q&A sessions we host. Head over to metatradingclub.com and check out the free resources available. We'd love for you to join our community today.
This has been The Deep Dive, powered by MTC Radio.